Hi, it's Adam Hewison coming to you from Traders Whiteboard. This is our third lesson, and the question is in threes. What are the three things the market can do? The older I get, the simpler I want to make my life, and certainly in trading, you keep it simple. So let's just look at the simple look at markets. In our cover, this is lesson 3, and we want to look at the three things that the market can do. Well, the reality is good things come in threes, and with the market, you basically have a market that can go up, and obviously that's a bull market. You have a market that can go, yeah, you guessed it, it can go down, and that's considered a bear market. Now here's the rub. What's the third one? Well, the third one is actually a market that is somewhat interesting, but it really doesn't go anyway, it just sort of goes sideways. So that's called a sideways market. Now, I want to just emphasize, I'm showing you these very simple patterns because the reality is I want to show you how to trade them and use the best possible tools to trade. So let's look at our first pattern, and that's the bull market. So let's just draw a bull market, something like that. Well, really the best thing to do in a market that develops, you want a trend following tool. So you have a trend following tool which could be a moving average. And moving averages, you can decide on which size you want, whether it's a 50-day. Some people like to look at 200-day moving averages in stocks. But you have to understand this is a lagging indicator. So let's just put that lagging indicator. What that means is it's not going to get the bottom down here, okay? It's only going to pick up the market after it's made a turn. Now, this is important because the reality is you don't want to think about picking bottoms or picking tops. You want to get this kind of like the cool thing about trading, you really want to get the 70% of the move. And then we call that the sweet spot because that's where you're going to make most of the money. The tops and the bottoms, leave those to someone else because really no one picks tops and picks bottoms successfully. I haven't seen it done in 30-some years I've been trading the markets, and it's not going to happen anytime soon. So look for that sweet spot because that's really in between the top and the bottom. That's where you're going to make the most money. So that's in a trending indicator, and that's like a moving average. Now there are some other trending indicators that you may want to look at too. There is a very good, and I'm going to just draw this coming down, for example, very nice tool called a MACD. Some people call this the MACD. It's a moving average convergence divergence formula that was developed by Gerald Appel. And it's basically when you have two moving averages and they cross over. And that's how it works. And Gerald's done very well. He manages about $1 billion using this program. And this program is available in a lot of commercial chart packages as well as on Market Club. So this is another trend trading tool. Again, it's not going to get you into the bottom of a market, but it is going to indicate that when a market has made a turn to the upside or potentially to the downside. So it's a very, very good indicator, and it's one we like to look at quite often. So let's look at another indicator for trending, and let's say the market's coming down and then starts to go back up again. So an indicator like this, there's an indicator, just as a series of little dots that come into play, and what it is, it's almost like a moving average, but it's called a SAR. It is developed by I'll just write this down. I'll put it right here. It's SAR. It's a parabolic indicator, and it's stop and reverse. That was developed by Wells Wilder in the early 70s, and it's proven to be a pretty accurate thing. But again, this is a trend. So I'm going to put this down. This is important. It's a trend following tool, okay? So again, it's not going to be what we consider to be important for the third part of the market, and that's what we're going to look at right now. So let's say the market's doing this, and pretty much there is no trend. I'd say the market can do three things. It can go up. Obviously, we've talked about that. It can go down, and we've talked about that, the type of tools you want to use for going down. Trending tools. This is more of a trading tool. And what it is, it's an oscillator. And there are a number of oscillating tools, the stochastics, Williams percent R, a number of tools that you can use. And what happens when these tools come into play, normally what you look for is potentially divergences. Now you could have, let's say, I'm just going to draw a very, very clear line. This is the trading market. And an oscillator tool could be when you are at a low point. It could be, let's say, normally they have a 70% here, and they have 30% here. Okay, so typically what happens is when the oscillator gets below 30, it tends to be a buy, and when it gets above 70, it tends to be a sell. So that's in a trading range. But what they also look for is what's called divergences. Now I'll draw a divergence right here, which means the oscillator would be coming up like this. It would come down and it would come up again and then start down. That's a divergence. So we see the market's made new highs in its trading range, but the divergence on the oscillator is indicating that it's out of strength. Now this is something, some people are very good at trading this. I don't really subscribe. This is the hardest way to trade. As I mentioned, we're trying to keep things simple with our Traders Whiteboard, but this is just an idea of the three things that can happen in the market. And you've got up, down, and usually in between, sideways. So if you can basically identify with a trending tool when things are going up and when they're going down, then you can do pretty well. The sideways, leave that to the pros, in my opinion. It's not worth fiddling with. So we're just going to say, leave you this one thought, and that is this. Big money is made in trading the trend. So trade the trend. You'll be much better off. You'll sleep better at night, and you'll make more money. Thanks for watching Traders Whiteboard. Be sure to visit Traders blog. A lot of great videos, trading tips, all available to you for free.